My friends, let's do an AMC technical update. Before we jump into the video, nothing I'm giving you is financial advice. Everything is for informational and educational purposes only. And I really want to make that clear that I want you guys to make awesome decisions for yourself, your family, and your portfolio because I do think that we are coming up into some potential territory where we could really see some nice upside for AMC. And especially if you're in the option game, do not diamond hand those bad boys. I'm about to get into the option chain in just a little bit to kind of show you why. But, this week particularly, it can get really volatile with how many contracts are out there potentially in the money and out of the money and when market makers have to hedge for them and when they don't. So just please be careful. As far as your shares go, that is 100% between you and a sell button. I do not care when you sell your shares, just like you should not care when I sell my shares. So having said that, let's jump into the video. If you haven't done so already, please follow me on Twitter, Colin_Glab, an easiest way to keep up with everything that's going to be going on throughout the day. If you're new to the channel, please like and subscribe. All that YouTube algorithm stuff help the channel out. So just talking about the option chain, let's jump in and look at it. So if we bump up from, and where are we at? We're at $9. So essentially, if we move up another $1.09, then there is going to become, or have, if you will, 43,000 plus contracts go in the money at that point in time. If you don't know anything about options, each contract represents 100 shares. So if 43,000 plus shares go in the money, then you are going to have 4.3 million shares that are going to have to be dealt with at that point in time. That's obviously a very large percentage of shares. And every whole dollar above that, like for instance at 12, there's 10,000. At 13, there's 10,290. At 14, there's 6,000. So I mean, there is a ton of contracts that are out there. Holy cow, I'm just not looking at this. At $25, there's 24,000 contracts. I'd be surprised at that. I mean, I'm along for the ride, whatever. But, hey, it's nice to see that the highest strike price doesn't... Oh, no, never mind. I lied. There's 33,000 contracts at 50. Man. Be careful about buying contracts, my friends. But what I do like to see is that really close to in the money and at the money and just slightly out of the money, there's still a lot of contracts. And if you go down here and you look at the puts, like the $10 puts are only at 4,700 compared to, what did I just say it was, 20,000? So way call heavy as far as the option chain goes. Now, what's bad about that is going to be if we do start to pull back, then, currently right now, there's 16,802 puts out of the money at $9, and there's 14,872. So I want to be as clear as I can, in my opinion, we are at some very critical territory, because if we don't push up, and they don't have to hedge for all those calls that potentially could be running in the money, then, and we start dropping, then they can absolutely, all these other puts start going in the money. And that is not going to be good for us. You'll probably see some pretty good downside moves at that point in time. So it'd be really nice if the overall market could, help us out here just a little bit. Now, another good thing about the implied volatility, and I know if you guys watch a lot with Trey's trades, the implied volatility has been coming down, which we need. We almost just basically have to have that happen for like big runs to happen. I mean, you can see it dropped all the way down here right before the big March run. The most recent run that we just had dropped down here to about 105. We're currently sitting at 118, which is still below our 52-week average, so that's good. I would love to see it a little bit lower, to be honest with you, but I can live with it at where it's at. If we go over here to the chart, If we look at AMC on a weekly basis, right now we're kind of getting a spinning top, which is going to be like a 50-50 candle. And this isn't as big a deal, in my opinion, as the one that we got back here, because we're kind of in no man's land right now. Like, we're not really in a clear uptrend. We're not in a clear downtrend. So those spinning top style candles aren't as big a deal when you're kind of in the meat of the move, if you will, or in no man's land. Now, if we go over here to the daily, a couple good things. Number one, we actually closed above the 20-day EMA. So you can see right here, it offered as support on Monday. And then on Tuesday, we got rejected. Wednesday, we've now come up and closed above. That's very good. My last video, I showed you guys on the 4-hour that we got the 921 cross. And these are lagging indicators, okay? But typically you see good positive moves happen afterwards. And what I said was I basically just wanted to see this bad boy, kind of keep riding the 9, if you will. And so far, so good. Back on the daily candle, this is a bullish engulfing candle, and you can see we are still squeezed between the 9 and the 21 on the daily. So I would love to see us get on top of the 21, and then that would bring in the momentum to bring the 9 up after that. So once again, lagging indicators. No one indicator should ever be the sole thing that you trade off of. I always, for like my Discord, I always paint the picture of, every little piece, whether it's your trend line, whether it's your fib, whether it's your MACD, whether it's your RSI, whether it's your EMAs, every little thing needs to be a piece of the puzzle. And your job is to take as many pieces of those puzzles and put them together to paint, if you will, or create the picture that you're looking for. So having said that, speaking of trend lines, we have, in my opinion, fully recaptured this macro uptrend line that we've had over here from the May low. I addressed the whole head and shoulder thing. I'm not going to spend any time on that. Guys, one thing too, I do want to address this. I constantly, get asked through the day as far as like, have you watched Rico's video? Have you watched Trey's video? Have you watched Dave's video? Have you watched this? Have you watched that? And I'm telling you that I do not watch anybody else's videos before I ever make that my content, because I just don't think that's wise. I think you can create confirmation bias for yourself. So if I'm ever repeating anything that those guys are saying, obviously I think they're great. I think they're very intelligent. So I apologize for that, but it is not anything other than that. Okay. You can see right here where it was kind of chopped before the March run, and then it provided resistance before we really dumped down. Another way you could look at this is, we are in, some critical ranges here, in my opinion, not only with the option chain, but as far as the price goes. We definitely want to get on the northern side of a lot of these, spots that have acted as heavy resistance points here lately. But I expect continuation at this point in time. To me, the trend is bullish, and things are bullish until they're not. That's just how the market works, right? Like, everybody, look at SPY. Everybody was, jumping up and down. And which also too, this is really nice. AMC is definitely outperforming SPY this week, but everybody was, really happy. This looked good until it didn't. Okay. So a nice thing that you want to see here as well is, you're maintaining your macro uptrend on SPY. So above these trend lines, there's not a lot of reason to be bearish, in my opinion. It's everything leans more bullish than bearish. That's as simple as I can make it, okay? So I'm not going to try to create, you guys know me. If you've watched my content for any amount of time, I will always give you the bull and the bear case. But it is just more, another piece of the puzzle is going to be fibs. We got the 707 bounce, and now we broke back up into the 0.65, looking to head to test the 0.618, So we're in the golden pocket right now. We're making a bullish move into the golden pocket. You can see, we have typically, when you make bullish moves in there, and you might get rejected above that, but if we're crossing into it and heading upwards, then typically we get good results. So when I factor in the EMAs looking good, when I factor in, let's look at RSI. I'd like to see it above 50. I haven't even looked. So it's not. It's pretty close, like 49.14. So I'd like to see the RSI crossing over 50. Between that 50 to 70 is typically when you have more bullish momentum in the stock. Another momentum indicator is going to be the MACD. We got the cross yesterday. We got a deeper green today. Like I said, typically you go back and you look at this. Just let me get rid of the RSI here. And I'll make the MACD a little bit bigger. But typically, when you see the blue line cross the orange line, you see moves to the upside. Blue line, cross the orange line. Blue line, we'll see, crossing the orange line. Blue line, crossing the orange line. Now, not every move is going to be sustained forever. No moves go straight up and no moves go straight down, unless it was SPY yesterday. Am I right on that? God, that was crazy. But typically, you see this MACD cross happen on the daily, and it is indicative of momentum to leaning towards the bullish side of things. I look at the price action. The bulls look in charge. Your bullish candles are way bigger than any of your bearish candles down here. I look at the volume. The volume started to increase on this move. Once we broke the macro trend, the days that were the red days, the volume was just almost nothing. The volume drifted off as we broke that. If we would have broken this trend right here and the volume would have picked up as the once the trend broke, if the volume really ramped up, then I would have been like, we in trouble. Okay. And like I said, I have zero problem telling you guys that if that's what I think. But I just don't. Okay. I don't have, there's definitely reasons for concern. Yeah, we could come up here, get rejected. If we get rejected off the 0.618 and then we break the trend, then if the volume starts, there are definitely things that can happen that would lead to a more bearish stance, but I'm not going to be, like I said, I think we should be cautiously optimistic, but overall, everything looks way better than it did, once we were here, once we got this reversal. AMC, every time before it has, big moves, it kind of has these upwards accumulations that it goes through. Not, this one's, a little bit more sideways right here, but you can see, the June run, especially if you zoom in a little bit more. You got the January run right here, which led to the January run. It's just anytime you come down here and you start, AMC likes to rev its engine up a little bit before it gets a really big move. Rev up, really big move. Rev up, really, really, really big move. Right here. Rev up, price action gets better, big move. So that's what I'm looking for. I'm looking for a rev up for a bigger move. Now, how high that move is going to take us, I don't know. This is the type of week that you want to see it, though. It really is, being on an OPEX week. You've got T+2, which would be Tuesday of next week. If a ton of contracts really start going in the money, you could see some crazy action happening. So from a more macro perspective, these would be some price targets that you're going to be looking at. You've got 12, you've got 1350, 1470, 1654 would be the 786. And look how that lines up right there with the top of the previous move. You got the 1.618, which would be 2567. You got the 3.618, which could be all the way up to 47. Now, I don't personally see that. I'm happy to go on that ride, but I don't personally see, something like that going on unless we just really start ramping up volume wise, like what you saw over here back in the March run, the June run, the January run. You guys know what volume we're talking about. Volume's king around here, okay? If we get a pump up to 1341 and this volume is still looking like this down here, I promise you we're coming back down at that point in time. So if we do start to see big moves, if your contracts start running in the money, you start making money, but if the volume is not supporting the move, I implore you to take profits. I'm not your dad, except for you trolls. But I just implore you to be smart anytime we've got, just stop messing up runs, okay? I can't say it enough. I can't say it to myself. I can't say it to the Discord. I can't say it to Twitter. I can't say it to YouTube. Don't mess up runs. That's when you have the opportunity to really make some money, where you can add a whole lot more shares if that's what you want to do. But don't mess up the runs, especially from an option viewpoint. Okay? I'm just going to leave it at that. I expect continuation tomorrow, especially if the market can rally, which I think that it's going to be honest. I think we're at least going to come back up here to around that 400 range before we potentially could see, another push down. There's really, if we get past that resistance today, which it did in after hours, there's really not much standing in the way before, hitting about 397. And then, you break above that. Then you got your gap fill at that point in time. And that can take you all the way back up to, 400 plus. So be interested to see kind of what happens up here in this little supply zone area. Might get rolled off right there, but we'll wait and see. But if the overall market can improve, I'm very, very happy with how well AMC has held up with this past couple of days in SPY. So if the overall market can really turn around, we could be in for a ride. So at the end of the day, that's what I'm looking for, my friends. I hope this video was helpful to you. Don't mess up options. There is a ton of options that are going to be running in the money unless they're far dated out and the volume is really supporting this move. Please be smart. Take profits. You got into the stock market because you wanted to make money. You don't make money diamond handing options and watching them go to zero. That is not how money is made. You can always reposition where you're at, okay? So take your profits, reposition somewhere else if that's what you want to do. Let the IV cool off. That's what I do. But don't diamond hand options and get yourself, in your portfolio in a world of hurt. I've had way too many messages of, people who have been absolutely wrecked by this play because they're listening to the wrong people. So quit going back and listening to those same people. Listen to people who, once again, they're not there to tell you what to do. I'm not here to tell you what to do. But at least listen to people who might truly have your best interest at heart, which your best interest at heart is making money. That's the reason you got in the stock market. Okay? I'm all for change. Whew, boy, does this stock market need an overhaul. But you're here to make money. You're here to take care of your family. Don't let some random Twitter personality who doesn't use their real name feed you a bunch of lies saying, no, $1 million a share or a bust. You're a paper hand if you sell below anything that's not 100,000. If it doesn't look like a phone number in your bank account, you're a loser. And you're not a loser, all right? You're smart as far as I'm concerned. I'll catch you guys in the next video.